I'm delighted to be joined today by Sadie Raney, co-founder and COO at Strix Leviathan. Sadie, thank you so much for joining us today.
Thanks for having me.
So we're going to talk a little bit about the BitMEX's news from last week. There's been a flurry of news coming out related to this. Can you give us your view on what's happening?
Sure. BitMEX is one of the, or if not the largest derivatives trading platform for cryptocurrency. And last week, there were simultaneous actions filed against them by both the Department of Justice in the United States and the Commodities Futures Trading Commission in the United States.
Mm-hmm.
And basically, the Department of Justice is working off the premise that BitMEX knowingly and willingly solicited US investors to use their platform, and that in doing so, they became a futures commission merchant and would be subject to the Bank Secrecy Act, and therefore would have a number of different money laundering requirements that they would have to follow, and they didn't, which then leads to the second charge, which is that they not only didn't comply, but they knowingly and willingly tried to subvert those regulations. So these are both criminal charges. They're charged against 4 of the executives of BitMEX, and if convicted, each of them carries 5 years. And then on top of that, the CFTC filed civil enforcement actions against BitMEX for failure to register as a trading platform, again, based on the premise that they have US investors that they solicited and knowingly serviced. And from there, there's various violations of the CFTC regulations. And the penalties for that are financial and completely unknown, but very likely could be quite high.
Yeah, definitely. So how has this impacted the markets themselves? How is the market reacting to this news?
You know, as with everything, it seems there are both bull and bear narratives popping up having to do with this. But what we're seeing reports of happening are that upwards of 50,000 BTC has now been pulled off of BitMEX, which is notionally around $500 million US. And the open futures positions are down 50% from a reported high just about a month ago in early September. So on the flip side, we're also hearing reporting that there's a record number of new BTC wallets being opened. So one might think that BTC is leaving BitMEX, but people aren't leaving BTC because of this.
Yeah, I've seen a number of things on Twitter where, people are commenting that this is obviously big news, but yet, the Bitcoin price has not, been materially impacted, right?
Yeah.
So from your perspective, is this something that was unexpected?
No, it's not a surprise from our standpoint. When we started the company 3 years ago, there was very little regulation that applied to digital assets. So, some people took that to mean you could just do whatever you wanted and only worry about it when there was regulation. And we took the opposite tack along with a number of other people, and we looked at why regulations were out there, how they would apply to what we were doing, and then worked from there. We're really excited about this industry. We want to be in it for the long term, and we just knew that the rise of the regulatory regime was inevitable. I think that's actually one of the biggest issues for non-US companies, is that they think that they're not based in the US, so they're not subject to US rules, but the US definitely disagrees with you if you have US customers that are using your platform or your product. And they don't even have to have regulations specifically related to what you do, such as digital assets. And we saw with the case of Satoshi Dice, which was a betting platform, online betting platform. You could bet in BTC. And at the time, there was no regulations against online gaming. There was nothing saying that Bitcoin was a security. And in 2013, at the advice of counsel, Satoshi Dice blocked all US IPs, but by that point, they'd already had $400 million transacted through their website. Mm-hmm. And the SEC fined them and went after them for securities violations, which leads to kind of another issue with our industry, is that regulators can double down on you. They can penalize you for not registering, but then they can also penalize you for violating the regulations that apply to the registration that you didn't get. Mm-hmm. So, and it doesn't even have to be digital asset specific again. They can decide that retroactively, which is really hard. From our standpoint, a regulator tomorrow could decide that a specific coin is a specific thing that applies to a regulation that we've now violated, and you can be fined for trading it yesterday or last week or last year. So it's really hard. It stifles innovation in this space quite a bit.
So, Sadie, how do you think that this might impact the crypto space going forward? Do you think that other people will be deterred from either entering the space or from trying to skirt regulations going forward?
I hope it doesn't deter people from entering the space, but I do think it will deter some people that are considering skirting the regulations in similar ways. But overall, this is not going to deter people in general in the financial markets, because this isn't a new occurrence, and it's definitely not specific to crypto. Just 2 days before the BitMEX announcement, the Department of Justice and the CFTC also issued parallel actions against JP Morgan Chase and a number of their affiliates for fraudulently engaging in manipulative trading of US securities, which Morgan admitted to, and the fines for that are over $900 million US combined, and they're going to receive a 3-year deferred prosecution agreement. So that's a 200-year-old household name in traditional markets. So, I don't think it's new to crypto, and unfortunately, I think it'll just continue because the regulators are always going to regulate.
Yeah, absolutely. So you mentioned a deferred prosecution agreement. That's something that happens, quite often with banks, large companies that, some would argue are too big to fail. How do you think this BitMEX case might resolve?
The BitMEX case, well, I think that really is going to heavily depend on what BitMEX was doing behind the scenes to validate their money laundering, or to ensure that they had no money laundering happening on their platform. Having a policy that says you can't have U.S. customers is definitely not enough. And, even if you have a terms and conditions that the investor signs that says they're not a U.S. citizen, that still doesn't cover you. The regulators put the onus on the company. So it really is going to depend on what BitMEX was doing behind the scenes. But whatever happens, it's going to take a long time, I think. If the New York Attorney General case against Bitfinex is any example, they'll spend the first 2 years just arguing about jurisdiction. And then from then on, they'll have to prove what they're accusing BitMEX of doing, and that could take a number of years unless there's a smoking gun somewhere that we don't know about.
Okay. Well, Sadie, thanks so much for joining us today and providing some color and context around this story. We'll be watching it both closely, and we'll have you back in a few weeks, and we can check in again.
Great. Nice talking to you.
Nice talking to you.